Hey everyone, it's Andrew with the Market Mindset. It's Stock Talk, and we're doing a reaction video again, and this time it's to Jim Cramer. Now, of course, many of you know Jim Cramer from Squawk Box. He's been on for probably more than 2 decades, but many of you may not know that he is a Harvard grad with a magna cum laude. He's did very well, and he did work at Goldman Sachs, which is a very prestigious investment bank, exceptionally hard to be hired by, and had a hedge fund and sold out his hedge fund in 2001. Now, I know he's a bit of a meme because of Wall Street Bets, and he's more of a market entertainment guy, but he covers a lot of the stocks out there, and he does a good job in getting news out about different stocks and what's happening in the market. And like I said, it's kind of a value-tainment or a market-tainment kind of thing where it's entertaining to watch, it's fun, and he gets some names out here. So this has to do with ARM. ARM had its big IPO yesterday. Definitely relevant news. Let's take his take.
The bears, they just don't get it. They see the world as it is and are realistically upset because there is so much going wrong every day. They see the Fed not letting up in its fight against inflation. They see the earnings disappointing. They marvel at how weak things really are and how a recession is just a hair's breadth away. And then we get an ARM Holdings, today's huge and highly successful IPO. This was a deal that worked well for both sellers and buyers. One that's right smack in the middle of the tech world, including AI, because they're working with market darling Nvidia, and suddenly all is right with the world.
Okay, I just want to jump in there just quickly because he makes a good point, is that, and I guess it comes back to mindset. You've got bulls and bears, you've got longs and shorts in markets, and you'll know me, it's hard to find a lot of positive out there. Economically, financially speaking, in the markets, it looks pretty bleak. And despite lots of attempts to push a positive message, there's nothing in the near term that most people can see. But you can choose to just kind of look at right now and be overwhelmed and think, oh God, this is awful. Or you might have a bit of a longer time frame and choose to spend your energy to go, I'm more optimistic long term. We've got a lot of initiatives that are underway that might take time to develop, and a lot of chaotic world events that need to settle down. But long term, there's lots of optimistic things to look at. So I like that he's taking this kind of perspective. And of course, that is key to how ARM did, how it performed on its IPO, its first day trading yesterday. So those of you who aren't following, ARM is headquartered in Cambridge, United Kingdom. So it's an English company. It's a multi-processor designing, graphics processing or GPU design company, but it also has its neural processing unit. So it's an AI plus semiconductor play, which are 2 exceptionally hot terms, markets, key drivers today, despite everything else. Those are ones that pretty much everyone across the board knows is, high interest talks between the U.S. and China. There's a lot at stake between that and Taiwan. There's an interesting play there happening. So this was one that people were keeping quite a bit of attention on because of the amount of interest that it came from massive funds. So ARM's CFO, Jason Child, mentioned that they sold $735 million of shares to strategic investors. And these really are. So Apple, Google, Nvidia, Samsung, AMD, Intel, Cadence, Synopsys, Samsung, and Taiwanese semiconductor manufacturing company. So along with all of, whether it's SoftBank, Goldman Sachs, all the investment banks, all the major hedge funds, this was a big, big IPO, the biggest ever. So there was a lot riding on it. And how did it do? It did quite well. But let's get back to what Jim Cramer has to say.
So after an uninspiring opening, the averages soared, with the Dow finishing up 331 points, S&P rising 0.84%, Nasdaq gaining 0.81%. Is it really that simple? Yes. Yes, for one reason. See, there's always so much sideline money at all times, waiting to get in, waiting for a signal that things might be better. And after 18 months of no IPOs to speak of, the multi-billion-dollar ARM deal was exactly what they needed. Suddenly, all the sideline money comes pouring back in because the IPO market is a terrific barometer of market health. That wave of new money wasn't something the bears saw coming, and it makes it impossible for them to control the narrative. In short, a fabulous IPO like ARM Holdings blots out the negatives and accentuates the positive. Next thing you know, the whole market has a change of heart, despite the incredibly smart, rational protestations of the myriad bears.
Okay, let me pause it there as well, because it is that simple. If you've got a really hot deal, a really great deal, this is textbook. This is what you want. You want those first like venture cap people that would have funded the private equity arm before the company went public to see an IPO strategy to exit, and then an appropriate exit for them to hand it off to the public markets. This is it. And also to get the retail investor very excited. And they were excited because, once again, there's not a lot of wins out there. There's not a lot to be excited about out there. And let's put that into context as well. And just look, say it at Canada. Right now, the IPO market has shrunk dramatically. I believe the TMX group said that it was down 78%. The TMX CEO, Jim Cramer, said the exchange has about 1,600 companies in its IPO pipeline, and more than half are technology-based. So that gives you a sense of what's waiting on the sidelines, like Jim Cramer is saying. One other thing I want to quickly mention too is that there's about $5.6 trillion sitting on the sidelines as far as Bank of America sees it. They have a chart that shows that money market funds has hit a record high, and that, just as we had heard from some Canadian hedge funds, that it's just sitting waiting, and they're sitting and they're loving cash. They can get a good rate in cash, take very little risk, and just wait to see who's entering, who's coming out, who's interested in the market again, and what sectors they're interested in. So I just thought I'd show some of the data on that, especially as it pertains to Canadian markets, and get back to Jim.
Now, does it make sense for the market to work like this? Of course not. It's absurd. ARM by itself doesn't change anything. You and I know that. In terms of facts and figures, it should be meaningless. But psychologically, it damages the bear case in several important ways. And the market runs on psychology, not hardcore, steel-eyed analysis. Let me take you through the bullish green shoots one by one. First, Wall Street doesn't make much news these days, but the ARM deal is big. It's news. And because it was priced deathly with real thought, it didn't pop up huge and then go down. That would have been terrible. Instead, it popped a moderate amount. Good, and then continued to rally. Also good, closing up nearly 25%. A little too high, but I get it. Meaning, even if you bought it at the opening, though, you still made money. A lot of money. That's very important because it reminds people that there are more ways to make money in this market than just riding Magnificent 7 and selling everything else or getting in on the deal itself. You made money if you bought it after it opened.
Well, I want to put some caution there, because yes, if you have a great deal and it performs well, that's excellent. The problem will be, will it be able to hold on its own? I suspect it's going to have some challenges. It's rocketed up. It's been supported well, but the overall economic theme isn't great out there. But this shows that there is hungry money. They're excited, and they're almost like they'd wish that there was a better environment to grow in. There just isn't. But that could be coming around the corner. You know, we constantly hear about whether we have been in a recession. I know they changed the terminology of what a definition of what a recession is. You've got mixed messages about how inflation, isn't caused by printing money, which it obviously is. So there's lots of narratives being kind of thrown out there. And we've talked about too, is you don't want to be completely pessimistic. You want to project some positivity, because if you allow the bears to just show it the market to no end, they will crush it. They'll continue to crush it while they make money. And that's not positive. I mean, overall, you have to have these instruments in order to make an efficient market, but you also, it doesn't lie to you. It's showing you that, yes, this one deal is a diamond. It looks great. There's a lot of hype about it, but it's smart hype. This is a fantastic sector to be involved in. But does it mean we're going to have an overall shift in markets? I don't see it yet, but let's just hear what Jim says.
We'll evaluate the ARM deal later in the show, including talk about how much it's worth. But right now, I want to talk about the mistake the bears made today. It's a mistake I made many times when I was younger. They never imagined an event, seemingly meaningless event, could change things, at least for now, beyond all reason. And that brings me to the second one. During these last 18 months, there have been really almost no IPOs of any significance. Without IPOs, everybody in the investment banking industry, including two Dow components, JP Morgan and Goldman Sachs, was missing out on a major line of business: underwriting. And there was no point in calling up executives of privately held companies and suggesting that they IPO, because nobody wants to try to come public in a frozen IPO market like we had. Today, though, the bankers suddenly have a reason to call companies, and you better believe they're calling. They're saying, look at me and look at ARM. The market's back. That's a powerful, positive phone call to make, an amazing catalyst for the whole industry. I expect to see JP Morgan, Goldman Sachs, and Morgan Stanley stock marching higher from here. The bears didn't have that on their bingo card, and it's going to happen just like that. How do I know this? Well, first of all, I worked at Goldman and did these things. And second, I tapped Goldman to bring a company public during a period when it was bad and then it was good. I know how this game works. Now, lately, we've had horrendous performances from anything in the cell phone and personal computer business, and I don't see that changing. ARM certainly didn't tell us that things are getting better in those key markets, although we always hear hints that the PC's coming back. Hint, hint, hint. But we know that the artificial intelligence thesis, the third positive, is alive and well, which means it's not worth selling anything right now in that industry. In fact, the way I see it, ARM could rally almost 25% today because its partners with Nvidia on their latest and greatest chips, they designed the architecture for Nvidia's new CPU that goes with their graphics cards as part of the super chip platform that Nvidia's put together. That's why Nvidia wanted to buy ARM a few years ago. There was no real overlap, but the regulators, they blocked it anyway.
Okay, I'll stop it there because a lot of great points here. And once again, he's bringing specific experience of working in very challenging markets, which he has both at an investment bank and in a hedge fund, where this becomes a catalyst. And I would also, having worked at Merrill Lynch, would guarantee that in the sales call, they would be rallying the troops very quickly and emphatically. Call every single semiconductor AI company you have, and let's see if we can get a push. Because they make money by selling products and bringing companies public and getting markets going. Does that mean everything's going to be great and there's going to be a huge shift? No, but it starts adding some momentum. And once again, a couple of little shocks of momentum to deal with a lot of the troubling information out there might get us through some tough times before markets really start to take off. And once again, what we try to look at is that $5 trillion sitting on the sideline. It's going to come back in sooner or later. And we think we know those themes that it's going to head in. And that is a major opportunity. Now, timing when that happens is exceptionally tough. We don't do that. Hedge funds might, depending on which ones you're looking at. But for us is if you're looking and getting educated in the themes that are important, that, hey, you might have passion or interest in, whether it's with energy, the green economy, AI, all these future looking forward sectors, come join us. We talk about them. We think we're in some strong plays ourselves. You can find out what those are, but we're going to cover them anyway and help educate people, kind of like a value-tainment or a market-tainment type of approach, where we're going to get discussion going, see what you think of different companies, what we think of different companies, and really start to engage with you to see, hey, can we put two and two together and come up with a great strategy moving forward? We'll share our strategy with you. You can feel free to share some of the companies and strategies that you're looking at as well. We'll talk to you soon.